Hello and welcome to the World News at Souk News Television. I am Omobola Sandra. Here are the headlines. Nigeria faces 15% tariff on its export to the U.S. as part of trade policy from the Trump administration. Federal government is collaborating with the Lagos state government on a land reform program. South Africa has presented a new deal to the U.S. in an attempt to lower the 30% tariff imposed by the U.S. The United Kingdom's unemployment rate at a 4-year high amidst U.S. tariffs. And Inter Milan has resumed pursuit of Ademola Lookman, with Napoli also entering the race. Nigeria will face a 15% tariff on its export to the United States as President Donald Trump escalates a global trade war, imposing targeted duties on specific countries and products. Trump has introduced a baseline tariff of 10% on all U.S. imports, alongside higher rates for selected nations. Nigeria's rate exceeds the baseline, placing it in the same bracket as Afghanistan, which is also facing a 15% duty. Some countries are hit even harder, with Algeria facing a 30% tariff. The move is part of Trump's strategy to apply different rates based on trade relationships, product categories, and perceived economic advantages. Analysts warn that the higher tariffs could affect Nigeria's export competitiveness, especially in key sectors like agricultural produce, textiles, and raw materials. The Nigerian government is yet to issue an official response, but trade experts are calling for swift negotiations to mitigate potential economic fallout. The Federal Ministry of Housing and Urban Development and the Lagos State Government are in collaboration to host a stakeholders workshop on National Land Titling, Registration and Documentation Program, NLTRDP. Housing and Urban Development Minister Ahmed Dangiwa is scheduled to flag off the workshop, which will be hosted by Governor Babajide Sanwo-Olu. A statement from the Director of Press and Public Relations, Badamasi Haiba, said in Abuja. The workshop, which is slated to hold on Tuesday in Lagos, is expected to have high-profile attendance from the built environment, professionals, real estate experts, mortgage institutions, and other financial services stakeholders. The federal government, through the Housing Ministry, had said it was working closely with the World Bank to implement land reforms to unlock the potential of Nigeria's landed assets through the NLTRDP. A similar workshop was held in March 2025 in Abuja. Nigeria's non-oil exports rose 19.6% year-on-year to $3.225 billion in the first half of 2025, driven by strong global demand and supportive trade policies. Reuters reported, citing Nigeria Export Promotion Council Chief Nonye Ayeni. Export volumes increased to 4.04 million metric tons, up from 3.83 million metric tons in the same period of 2024. Cocoa beans, urea fertilizer, and cashew nuts led the list of top-performing products. Cocoa alone accounted for about 35% of the total export value. Ayeni said cocoa and its derivatives benefited from higher global prices, expanding local processing capacity, and robust international demand. Government trade initiatives and regional trade agreements also helped boost shipments. The performance underscores Nigeria's push to diversify away from oil, with policymakers betting on agriculture and manufacturing exports to strengthen foreign exchange earnings and reduce economic vulnerability to oil price shocks. And now Nigeria's health authorities say 2,690 women have benefited from fistula surgeries, while 5,289 women received free emergency obstetric care between January and May 2025. The figures were disclosed by Dr. Agi Amogo, Principal Officer at the National Health Insurance Authority, NHIA, during a multi-stakeholder meeting in Calabar, Cross River State. According to Amogo, the interventions are part of the Fistula Free Program, FFP, launched in June 2024 to address the estimated 4,000 new cases of obstetric fistula recorded annually in Nigeria. He described the initiative as a major boost for maternal health, noting that the program not only restores dignity to affected women, but also improves access to critical emergency care for expectant mothers nationwide. The daily average demand for premium motor spirit, PMS, also known as petrol, stabilized at about 38.94 million liters per day in June this year, with Lagos State consuming about 14.27% or 205.66 million liters out of the roughly 1.44 billion liters national supply for the month. Analysts say that Nigeria's monthly truck out of petrol in that month totaled over 1 billion liters, with Lagos alone taking 205,664,228 liters, underscoring the city-state's overwhelming share of retail fuel distribution in the period. The data was presented by the Nigerian Midstream and Downstream Petroleum Regulatory Authority, NMDPRA, to the Federation Account Allocation Committee, FAC, during their July meeting. Analysts also show that the official state-by-state truck-out breakdown indicated a very uneven spread of petrol offtake across the Federation, reflecting population concentration, transport and commercial hubs, industrial demand and logistic patterns. And now, the cost of cooking gas in Nigeria continues its upward climb according to the latest data from the National Bureau of Statistics, NBS. In June 2025, the average price of refilling a 5-kilogram cylinder of liquefied petroleum gas, LPG, rose by 1.92% to 8,323 naira, up from 8,167 naira in May. While the monthly increase appears modest, the year-on-year surge is sharper, a 19.49% jump from 19.49% jump from 6,966.03 naira recorded in June 2024. Larger cylinders have seen even steeper hikes. The average cost of refilling a 12.5 kg cylinder climbed to 21,010.56 naira in June, a 1.46% rise from May's 20,709.11 naira, compared to 15,736.27 naira a year earlier. This represents a staggering 33.52% increase. Analysts warn that the sustained price escalation could deepen the cost of living crisis, forcing more households to seek cheaper but less environmentally friendly alternatives such as firewood and charcoal. The NBS figures highlight the growing financial strain on Nigerian families amid broader inflationary pressures. Nigeria's cocoa industry has recorded a jump in exports in the last quarter of 2024, rising from 171 billion naira in quarter 4 of 2023 to 1.2 trillion naira. The Senior Special Assistant to the President on Agribusiness and Productivity Enhancement, Dr. Kingsley Uzoma, said this at the Nigeria-EU Cocoa Roundtable on EUDR compliance, described cocoa as a strategic non-oil export, driving the nation's shift away from petrol dependency. Cocoa now accounts for roughly 29% of Nigeria's total agricultural exports and 5.6% of non-oil exports, with over 300,000 smallholder farmers producing 80% of the national output. In the 2023-2024 season, Nigeria produced 320,000 tons, aiming to reach 500,000 tons by 2025 through targeted interventions. You are listening to the World News on Souk News Television. We'll be back after this break.
At the Africa Development Studies Center, ADSC, we are committed to driving sustainable growth and development across Africa through innovative training and research. Our mission: empowering leaders, policymakers, and professionals with the tools they need to create lasting change. With customized training, dynamic research programs, and study exchanges on leadership, management, and other critical development topics, ADSC offers a platform for exchanging cutting-edge ideas and global best practices. We provide comprehensive services in research and consultancy, capacity building and training, education programs, publishing and knowledge sharing. Our esteemed faculty, composed of seasoned experts and researchers, ensures a learning experience that is insightful and practical. We specialize in policy development, implementation strategies, and monitoring and evaluation. At ADSC, learning is engaging and enjoyable. Our unique methodology includes talks, interactive exercises, games, video screenings, and lively seminar discussions, all in a comfortable and friendly environment. For more information, email us at info@adstudiescenter.com or call +234 912 039 2362. Visit our website www.adstudiescenter.com to explore our programs and upcoming events. Africa Development Studies Center, rethinking development for Africa.
Welcome back. South Africa will submit a revised trade proposal to the United States on Tuesday in a bid to reverse the 30% tariff on its exports imposed by President Donald Trump. Trade Minister Parks Tao confirmed the move after months of unsuccessful negotiations, saying the updated offer directly addresses concerns raised in Washington's 2025 National Trade Estimates report. The plan includes resolving long-standing sanitary and phytosanitary dispute with U.S. poultry and pork shipments already scheduled to travel to South Africa within 2 weeks. Agriculture Minister John Steenhuisen described the proposal as broad, generous, and open, stressing it meets the ambition levels demanded by U.S. negotiators. The revised offer seeks to secure benefits for both nations by expanding market access and easing tariff pressures on South African goods, which were hit with the highest rate in sub-Saharan Africa. The government hopes this move will restore investor confidence and protect export-dependent industries from potential job losses. However, Steenhuisen cautioned that the tariff may remain if South Africa does not address certain domestic race policies, such as affirmative action, which have drawn criticism from Trump's administration. The outcome of the talks could significantly influence South Africa's trade balance, currency stability, and broader economic growth trajectory as it navigates one of its most critical bilateral trade negotiations in years. Also, the South African rand held firm in early Tuesday trading as investors awaited the release of domestic mining production and unemployment figures. By 6:18 GMT, the rand was trading at 17.74 against the United States dollar, about 0.2% stronger than Monday's close. Market's focus is on Statistics South Africa's June mining production numbers and second quarter unemployment rate, due at 9:30 GMT, with forecast pointing to a 1.4% year-on-year rise in mining output compared with a 0.2% gain in May. The jobless rate in Africa's most industrialized economy is expected to edge higher to 33.0% in the second quarter from 32.9% in the previous quarter. Analysts note that the data could influence investor sentiment in the short term, especially in light of ongoing concerns about South Africa's structural economic challenges. At the same time, global market direction may be swayed by the United States inflation report due later today, which could shape expectations on the Federal Reserve's interest. In broader market, the United States dollar traded flat against a basket of currencies, leaving risk-sensitive currencies such as the rand dependent on external cues. South Africa's benchmark 2035 government bond yield inched up by half a basis point to 9.675%, reflecting cautious positioning ahead of both local and international data releases. Traders suggest that stronger than expected mining growth or a softer unemployment rate could give the rand short-term support, though global monetary policy signals will remain a key driver. All right.
Welcome to the Africa Development Studies Center, ADSC. ADSC is an organization focused on training and research to advance sustainable development and growth in Africa. We exist to facilitate customized training, research, and study exchanges worldwide on leadership, management, and critical development issues. The center offers a platform for the exchange of ideas and best practices. Our comprehensive services encompass research, consultancy, capacity building, training, and education programs, as well as publishing and disseminating development-related knowledge. Our faculty consists of experts and researchers with extensive experience in policy formulation, implementation techniques, and monitoring and evaluation. Our methodology involves talks, individual and group exercises, games, video screenings, and discussion seminar sessions in a cozy atmosphere, making learning enjoyable for our participants. For more information, email us at info@adstudiecenter.com or call +234 912 039 2362. Visit our website at www.adstudiecenter.com to learn more about our programs and upcoming events. Africa Development Studies Center, rethinking development for Africa.
Thank you for staying with us. It is still World News on Sook News Television. India's Securities and Exchange Board announced plans to further simplify regulations for foreign investors in a move aimed at boosting long-term capital inflows. The regulator revealed in its annual report that the reforms will focus on streamlining procedures and providing a more investor-friendly framework for global market participants. Earlier this month, the board proposed a single window clearance for certain foreign investment firms, particularly those owned by governments, pulling retail investor funds and classified as low risk. This initiative is expected to reduce compliance complexity and promote wider access to Indian financial markets. By easing entry rules, the regulator aims to position India as a more attractive investment destination amid global competition for foreign capital. The changes could encourage deeper participation from institutional players and enhance liquidity in domestic markets. And now Japan's benchmark Nikkei index surged to an all-time high on Tuesday, mirroring gains across major global markets. Analysts attribute the sharp rise to a mix of positive drivers, including the extension of United States-China tariff negotiations, a weaker yen, and a stronger-than-expected corporate outlook. Investor sentiment was also buoyed by recent global equity rallies, prompting a wave of buying in Japanese stocks that had previously lagged behind other markets. Market strategists noted that certain sectors, such as chip makers and auto manufacturers, had earlier weighed on the Nikkei, delayed its record-breaking move. However, renewed investor appetite, coupled with increased corporate share buybacks, has accelerated momentum. The benchmark is now approaching the 43,000 points level, with some analysts predicting a potential climb towards 44,000 if sentiment holds. Despite the optimism, experts warn that the market may be overheating, especially amid low trading volumes during Japan's Obon holiday. This period often brings heightened volatility, and while the underlying economic outlook remains solid, sharp price swings are expected in the near term as the investors weigh the sustainability of the rally. The Reserve Bank of Australia on Tuesday lowered its benchmark cash rate by 25 basis points to 3.60%, in line with market expectations, following a two-day policy meeting. The decision reflects the central bank's ongoing efforts to support economic growth amid moderating inflationary pressures. This latest adjustment continues a trend of rate management that has seen the RBA shift policy in response to both domestic and global economic cycles. Since 1990, Australia's interest rates have undergone significant fluctuations, moving from double-digit levels in the early 1990s to historic lows in recent years. The RBA noted that the current reduction aims to stimulate borrowing, encourage business investment, and bolster consumer spending while maintaining financial stability. Analysts say the move positions Australia to better navigate global uncertainties and weaker external demand. A full chronology of RBA rate changes since 1990 highlights the evolving nature of its monetary strategy, balancing inflationary control with measures to safeguard economic resilience. And now, Britain's unemployment rate held at a four-year high of 4.7% in 3 months to June, official data showed Tuesday, as job vacancies fell under the pressure of higher taxes and new U.S. trade tariffs. The Office for National Statistics, ONS, said the rate was unchanged from the March-May period, when it reached its highest level since June 2021. The data points to a cooling labor market with fewer openings as businesses face rising costs. A key factor was the business tax hike introduced in April under the Labour government's first budget, a move analysts had warned could dampen hiring. The same month, U.S. President Donald Trump imposed a baseline 10% tariff on imports from the UK and other countries, adding further strain to British exporters. Economists caution that unless conditions improve, the combined impact of slower hiring and weaker trade could prolong the country's employment stagnation. Also, the British pound advanced for a fourth consecutive session against the euro on Tuesday, supported by fresh labour market data that showed a smaller than expected slowdown in job growth. The euro slipped 0.24% to 86.24 pence, its lowest since late July, while the pound also strengthened 0.28% to trade at 1.3469 United States dollars, ahead of key United States inflation figures later in the day. Market analysts noted that the data reinforced the Bank of England's cautious stance on interest rate cuts amid persistent inflationary pressures. Despite a softer labor market in July, wage growth in the 3 months to June remained elevated, sustaining inflation concerns. Analysts at Morgan Stanley described the figures as relatively robust by United Kingdom standards, noting that the central bank remains firmly focused on inflation and pay trends. Last week, the Bank of England lowered rates by 25 basis points in a closely split decision, with nearly half of the rate setters preferring to hold rates steady. With inflation still above target, investors are now pricing in only on a 50% chance of another rate cut this year. The diversion between the Bank of England and the European Central Bank's pace of monetary easing has contributed to increased volatility between the euro and the pound this year compared with last, where the two currencies moved largely in sync. Traders will be closely watching upcoming inflation data from the United States for further direction on global currency markets. Switzerland precious metals sector is calling for the United States to issue a formal and binding commitment confirming that gold will remain exempt from trade tariffs. This followed President Donald Trump's recent assurance that gold would not be targeted in ongoing global trade disputes. While the announcement eased market fears and boosted investor confidence, industry leaders warned that verbal statements alone do not provide the legal certainty needed for long-term trade planning. Christoph Wild, president of the Swiss Precious Metals Association, welcomed the U.S. president's remarks as a positive signal for international trade stability. However, he stressed that the gold sector and its global partners require an official, written decision to secure business operations and protect cross-border trade flows from sudden policy shifts. Switzerland, home to one of the world's largest bullion refiners, is particularly exposed to disruptions in the gold market. Following Trump's comments, global bullion prices steadied, reflecting renewed confidence in trade continuity. Yet, analysts caution that without a formal exemption in U.S. trade law, uncertainty may persist, potentially deterring investment and complicating supply chain agreements. The gold industry is now closely watching Washington for a definitive ruling that could remove lingering doubts and preserve stability in one of the world's most valuable commodities markets. And now Brazilian President Luiz Inácio Lula da Silva and Chinese President Xi Jinping held an hour-long phone conversation on Monday, focusing on strengthening the BRICS bloc and deepening bilateral economic ties, according to statements from Brazil's presidency and Chinese state media. Both leaders reaffirmed their shared commitment to defending multilateralism and the role of major international forums such as the G20 and BRICS in promoting global stability and cooperation. Lula's office highlighted the discussion on how BRICS, comprising Brazil, Russia, India, China, and South Africa, can serve as a counterbalance in the evolving global order, fostering inclusive growth and fairer trade practices. Chinese state media reported that Xi emphasized the importance of strategic cooperation between Beijing and Brasilia, citing opportunities in trade, investment, and technological development. The conversation comes as BRICS nations push for reforms in global governance structures and seek to expand their influence in shaping economic and political frameworks beyond traditional Western-led institutions. The United States and China have agreed to extend their tariff truce for another 90 days, avoiding a sharp escalation in trade duties that threatened to reach triple digits on both sides. United States President Donald Trump signed an executive order delaying higher tariffs until November 10th, while China's Commerce Ministry issued a parallel pause on its retaliatory measures. The decision comes as American retailers prepare to stock up for the year-end holiday season, benefiting from lower tariff rates on key imports such as electronics, clothing, and toys. Without the extension, United States tariff on Chinese imports would have jumped to 145%, while Chinese tariffs on American goods were set to hit 125%. Analysts say such rates would have effectively created a trade embargo between the world's two largest economies. The current arrangement maintains a 30% tariff on Chinese imports to the United States and a 10% duty on American goods entering China, giving negotiators critical breathing room for continued discussions. Markets reacted positively to the development, with Asian stocks rising and investor sentiment improving amid hopes for a broader agreement. The extension follows recent meetings in Geneva and Stockholm, where negotiators urged more time to address long-standing disputes over trade reciprocity and market access. While both sides welcomed the temporary relief, trade experts caution that significant gaps remain and the possibility of renewed escalation after November cannot be ruled out. And now moving on to sports. Inter Milan have set their price limit for Nigeria international Ademola Lookman as they remain determined to secure the services of their #1 transfer target, whilst Napoli continue to circle the Atalanta forward. The Nerazzurri have been attempting to pull off a move for the 27-year-old for several weeks, but have not found a breakthrough in negotiations with Ladia, who remain reluctant to sell one of their star players to a direct league rival. According to La Gazzetta dello Sport, Inter have decided they are not prepared to go beyond their current price limit for Lookman, which is understood to be 45 million euros before bonuses and 50 million euros including bonuses. The Serie A champions have already seen an offer of 45 million euros including bonuses turned down for the reigning African Player of the Year, which led to Lookman releasing a statement via social media accusing Atalanta of breaking promises and claiming he had been treated poorly as a person and professional. Also in sports, Nigeria will face Sudan today in the second group stage match at the African Nations Championship, hosted across Kenya, Tanzania, and Uganda. The Eric Chell-led side is aiming to bounce back from a disappointing 1-0 loss to defending champion Senegal in their opener last week. That match remained goalless until the 75th minute, while Mokhtar Kouette's pace down the right flank created space for a precise low cross, which Christian Gomez converted with a composed left-foot finish. Finalists in 2018, Nigeria now find themselves in a must-win situation to keep their hopes of reaching the knockout stage alive. The clash at Amman Stadium in Zanzibar offers a chance for redemption and a vital 3 points in Group B. With pressure mounting, the Super Eagles B team will look to improve their attacking edge and defensive concentration as they aim to revive their campaign. And that's a wrap on the news, but before we go, the headlines. Nigeria faces 15% tariff on its export to the U.S. as part of trade policy from the Trump administration. Federal government is collaborating with the Lagos State government on a land reform program. South Africa has presented a new deal to the U.S. in an attempt to lower the 30% tariff imposed by the U.S. The United Kingdom's unemployment rate at a 4-year high amidst U.S. tariffs. And finally, Inter Milan has resumed pursuit of Ademola Lookman, with Napoli also entering the race. And that's a wrap on the world news on Souk News Television. Stay tuned for more updates on all our social media platforms at Souk News Television. Thank you for watching. I am Omobola Sandra.